We live in a world where we all have to be right. There's always somebody who's right and there's somebody who's wrong. It just seems like we are all trying to be right. Whether you look at politics or you look at the media or you look at financial gurus, everybody's trying to be right. But really when we measure up and we look at the success stories in the money space, because that's the space I like to talk about, we have to talk about Michael Burry. We have to talk about his success. Now, Michael Burry was made famous in the movie The Big Short, where Christian Bale played the character of Michael Burry in his bet against the real estate housing crash. And he bet roughly about 90+% of his entire portfolio against the market and against everybody else telling him he was wrong. He got that right, didn't he? Well, that's what we're going to talk about today. We're going to dissect Michael Burry's newest bet against the stock market. And we're going to find out, is Michael Burry going to be right? This is another episode of What Now? What's Next? So we have to roll the clock back. We have to go back to before the Great Recession, which all of you remember that, right? 2008, the Great Recession, the closest we've ever come in this country to a complete collapse of the financial markets. There was a man that nobody really knew or nobody even cared about named Michael Burry, who ran a hedge fund. And Michael Burry, back before the Great Recession, took bets against, that's right, everybody else. He was saying that the markets were going to crash. He was saying that real estate and everything that was going on with default swaps was going to crash. And he took a big bet. How much of a bet? Well, check this stat out. He bet $8.4 billion worth of credit default swaps in 2008. That's what he bet against the housing market. Well, at that time, if you watch the movie The Big Short, you'll find that everybody said he was wrong. And everybody was laughing at him because the premiums on the contracts that he bought, the insurance, basically against the default swaps, was going up and up and up, which meant he had to support those premiums. Otherwise, those things he was betting against would all go belly up. People in the hedge fund, his investors, all wanted to pull money out. He took a hard stance and he said, no, I'm not changing. I know I'm right on this. He was right and everybody else was wrong. But during the moment, everybody said he was wrong and they were right. You see, that's a really important thing to look at because we are a divided nation. It's divided on so many levels. It's divided on the color of our skin. It's divided on how we vote. It's divided on whether we're vaxxed or unvaxxed, and I could keep going on and on. And it's also divided on our opinion of where we're going next. I have my own opinions. I think we're going south. The birds are flying south. That's right, folks. Take that for what it's worth. I will tell you, and nobody can ever convince me different, that the markets are not going to hold these levels. We're going down like the Titanic. But you know, the good news is, I got a couple people that also think the same thing. Jeremy Grantham and Michael Burry. Which brings me to the main point that I want to talk about today, and this is what's been in the media of Michael Burry placing a $1.6 billion bet against the markets. So what Michael Burry did here is and it's not a this is where the media always gets things a little bit wrong. I mean, the media is just not the whole truth. We all know this, right? I mean, come on. All right. He didn't actually do 1.6. That might be the value or the face value, but really it's about $866 million. That's still a lot of stinking money. And basically, the sources say that it's roughly about 90% of his entire portfolio bet against the markets. Now, can he be right again? He got it right in 2008, and he made an awful lot of money. Matter of fact, he's gotten a lot of things right because his portfolio's returns for his hedge fund, Scion Asset Management, are about 340% over the last 10 years. Well, I'd say he did something right, maybe even a couple things right, maybe even a lot of things right. So he just bet against the markets. He bought put contracts. So let's just do a real quick lesson on what derivatives are. There's, in the simplest form, there's calls and there's puts. You know, calls, it's like, you pick a call up. So when I always say that, when you pick a call up, that means we're hoping something's gonna go up. So if you're gonna buy a call, we think the markets are gonna go up. And if there's a put, we put the phone down, pick the call up, put the phone down. That's how I learned it, right? Calls are up, puts are down. He puts on the SPY, which is the S&P 500, and also the QQQ, which is the NASDAQ. He thinks tech and the overall markets, the S&P 500, are going south, just like the birds. Matter of fact, kind of funny, the other day I was outside going for a run and I heard a bunch of geese quacking up in the sky in their normal V formation, kind of perfect V formation. Where were they flying? I gotta believe they're headed south just a wee little bit early. Well, I think they're trying to get ahead of this market downturn too, just like Burry is. So when you look at this, how can a man of his stature, an acclaimed movie of The Big Short, it was a famous movie, you've probably all seen it, based solely on his bet against the markets back then, actually against the real estate credit default swaps, but we're not getting specific. I gotta ask the same question. What does he know that we don't? Because he does a lot of research. He doesn't just put 90% of his portfolio in a position betting against something without a little bit of research. Matter of fact, a ton of research. I would love to spend an hour with Michael Burry. So if any of you know Michael Burry, short little pause. If any of you know Michael Burry, hook a brother up. Can you hook me up? I just need an hour. I just want to know what the man knows. And while we're at it, I bet you want to know a little bit more about what I know. So what I'd love for you to do is hit that subscribe button right there. Hit the subscribe button and I will do videos telling you what I know. And you know what? Yeah, let's go one step further. See that little bell up there? That's right. Hit, smash, and hit, and whatever you want to do. You can uppercut that bell, just so you know exactly what videos I'm putting out there. Sorry for whoever that hit. So some of you are still questioning, why should I listen to this Michael Burry guy? So I got some credentials for you. Let's go into them. So he successfully predicted the 2008 housing crisis. His portfolio returned 320% over the last 10 years. Let's hit his track history. 2015, he predicted a stock market crash. The market went up 11% in the next 12 months. So he got that one wrong. 2017, he predicted the global financial meltdown, but then the market went up 19% over the 12 months, so he got that one wrong. But did he really get it wrong, or was there something else going on behind the scenes? Hidden secret in that one. September 2019, he predicted an index fund bubble. Market went up 19% a year later. Start of the pandemic, he warned of a massive crash. The S&P went up 72% a year later. Got that one wrong. February 2021 issued a warning of a stock bubble. Market went up 16% a year later. September 2022, he predicted stocks would go lower. The market went up 21% 11 months later. January 2023, he tweeted to sell due to recession fears. The market went up 17%, or 15% if you consider the current week. August 2023, he's betting against the stock market in the tech sector. So he got a lot of things wrong, but his portfolio returned 340% over 10 years. So people love to focus on what people get wrong, but he didn't really get any accolades on what he did right except for the 2008 prediction. I know some of you are sitting there like he got an awful lot of things wrong, but I also want you to remember what happened in all those situations where he was saying something was going to happen and the markets were going to fall. And it was called the Fed. They always say in the Wall Street world, don't fight the Fed. And never try to time the market. And I'll preface that. The Fed has the ability to control monetary policy. The Fed can raise and lower interest rates. The Fed can print money. Well, the Treasury actually prints it, but the Fed controls how much and when. And they did just that. Printed $5.2 trillion. Between 5.1 and 5.2 is the actual number that they printed for the pandemic. That money's all still circulating through the entire system. And all of that money is partly the reason why a lot of his predictions were wrong. Even in 2017, if you roll the clock back then, you can find out why his prediction didn't actually happen. You see, what we're living in right now is, the only way I can describe it is a true house of cards. Or a glass house, whatever you want to do it. One event will take all those cards down. One rock shot out by your buddy's lawnmower takes the whole glass house down. But really it comes down to, what do you think is going to happen? You think Michael Burry is going to get this one right? You think he is going to lose 90%? You think he's going to have to close out all those option contracts? Because, options are really, really interesting if you learn about them. I talked about what a call and a put are, but also one contract controls 100 shares of stock. So that's called leverage. So by him doing what he did with 833 million, he's got huge leverage, about 1.6 billion in leverage. Not too shabby, right? This is one last piece of info that I want to give you in light of all those predictions he made that weren't right. See, people love to talk about people's failures, but they very rarely want to talk about people's successes, especially the media. And a lot of people, what you know of Burry's success is really from the media. And the media, I'm sure today, probably isn't talking too much about a lot of the things he got right, but let me just give you one. Traders who followed Scion's investments from May 2020 to May 2023. Now, if you remember, he got a lot of things wrong there, right? They would have made an annualized return of 56%. So it's interesting because Michael Burry's bearish predictions get a lot more attention than his optimistic bets because he's had a lot of optimistic bets. So what does all this mean to you? Should you run into the bunker, close it up, make sure it's stocked with food and water, take whatever money you have in the stock market, take it all out and put it under the mattress like they did during the Great Depression? No. But what this should do is wake you up a little bit because Michael Burry's got a really good track history. One that is proved to be right and wrong, but right in all the right ways. So this is a big bet he's making. So what should you learn from it? I would certainly say, if any of you can't handle the heat in the kitchen, in other words, if any of you can't handle a severe market decline, if you can't handle a 20, 30, 40% drop in your portfolio's values, well then get out of the kitchen. It's that simple. Warren Buffett says it best, buy low and sell high. Let me repeat that. Buy low and sell high. We are at a high point. I don't know how else to put it to you. I really don't. And if you do that, then you can't lose money. But if you ride this out, your chance of losing money is probably extremely high. I say you got about 100% chance of losing money if you stay in the market. One other thing, here's a really good thing to do. Create the bridge. Talked about this before. Sell high, get out of the market. Even if you got to pay taxes, consult with your tax professional. I'm not giving you tax advice or investment advice, but consult with your professionals to see if this makes sense. But I would sell and I would move into something really safe. Like what? Well, how about treasury bonds and T-bills and things that the government guarantees? Okay, maybe move that money into specially designed and engineered whole life policies like you hear me talking about all the time. All we want to do is create a bridge over the coming crash. Because if we create a bridge, it's a nice little walk. We can sit in the middle of the bridge and watch the chaos going on down below. If you don't know what that's like, well, go to Niagara Falls and just sit there right at the edge and be like, boy, I don't want to go down that thing. That's right. That's why there's a bridge that goes over it. So you can just watch the madness and the raging water and all the, well, there's probably fish going over that wish they would have got out of the river before they go over the falls. But anyway, we're not here to talk about fish. We're here to talk about your money. So another thing you can do is while you're creating that bridge, practice dollar cost averaging. Any new money's going in the market, yeah, put that into the higher risk stuff. Because if the markets go down, you want to buy low. And dollar cost averaging is a strategy that will certainly help for that. Listen, folks, I got lots of stuff I put out there that will give you the guidance into where your money could go, how your money could work for you. But I'm simply trying to talk about Michael Burry's newest bet against the markets. What's your bet? You gonna risk it all? You're gonna bet it all that the market's gonna continue to go higher when the economy is absolutely weakening? Well, that's on you. Because we do not have to agree, but we certainly can agree to disagree. Folks, I hope you've enjoyed this episode. I'm Chris Naugle. This has been What Now? What's next for you? Hey, if you like this video, you're gonna wanna check this one out. It's called You've Been Warned 2025. It's the most controversial video I've made to date. Give it a check. See you on the next one.